This segment sponsored by Foster Financial.
Welcome to Money Monday with Foster Financial, and today we're going to talk about some interesting stuff, and I'm so excited to be joined by Caleb Doane, the Vice President. Hello, Caleb.
Hi.
How's it going?
It's going well. How are you doing?
Doing well, thank you. Okay, so today we're going to talk about some misperceptions, things that people may not completely understand when it comes to finances. So break down what the topic will be.
Yeah, definitely. So I figured we'd do maybe a couple week series on this because we definitely see a lot of misconceptions when we're going through, just personal finance discussions, doing financial plans for people. And it's understandable because the tax code, just finance in general, can be very complex in different areas. So the one that I wanted to talk about today has to do with federal income tax brackets.
Okay.
Yeah, so I think one of the biggest misconceptions that I see here is that people are worried if they go $1 into a higher tax bracket, maybe they get a little raise at work or something like that. They think if they go $1 into the next tax bracket that all of their income is now taxed at that higher rate. And in reality, that's not the case. If you just go $1 into the next tax bracket, it's only that $1 that gets charged at that higher tax rate, which is why they kind of call it a marginal tax rate system.
Okay, so wait, so this doesn't apply to just $1, right? It's any amount that's above it. So if it's a $500 into the next tax bracket, you're saying that the original tax bracket will be charged and then the $500 will go under that. What is the max that they allow that before you do have to fully shift into the next tax bracket?
So if you're in the 22% tax bracket, it means you actually have some income being charged at the 10%, some income being charged at the 12%, and then anything above that is in the 22, right? As long as you still stay in the 22% tax bracket. So there's no kind of limit. It's just as long as your income is within that tax bracket, all of the income in that tax bracket will be charged at that rate. So it's a very common kind of misconception that we see.
I mean, listen, Caleb, I was today years old.
Right.
When I learned this, because I am single and I don't own a home and don't have kids, I'm in a high tax bracket, right?
Right.
So I always thought that all my money was being taxed at that. So it is tiered.
Right. It's tiered.
Wow. So why is it set up that way?
Yeah. So I mean, probably a big reason is because you wouldn't want, if you were $100 below the next tax bracket and then all of a sudden your work gives you a raise or something. If it wasn't tiered, if you were charged at a higher tax rate, especially when going from the 12% to the 22, if all of your income was now charged at the 22% rate, you'd end up net with less money than what you had before.
Right.
So of course the government doesn't want to disincentivize people from earning a higher wage and things like that. So it's all a tiered schedule. If you were making, just under the 22% tax bracket, so, all your income was in the 10 and the 12, and then you move to making a little bit more than that, all of that income is still in the 10 and the 12, and then just what you made on top gets charged at the 22% tax
And
rate.
are there specific amounts, or rather, do you know them? I hate to put you on the spot, but for each one. So what is the amount that you get charged up to 10%? What is the amount up to the next level?
Yeah, so the tax brackets change a little bit every year with inflation and things like that.
Right.
Off the top of my head, for somebody married filing jointly, at least is the common tax brackets that we often deal with, I think the 10% bracket is around $25,000.
Okay.
The top of the 10%, top of the 12% is around $95,000, $96,000. Above that, the 22% tax bracket is from $96,000, and it's pretty wide, so it goes up pretty high. So most people in their working years, if they're married filing jointly, especially if there's two incomes, a lot of times they're in that 22% federal income tax bracket there. So that's kind of like the common breakdown that we often see with that. And it's a very common thing to kind of be unsure on.
Yeah.
There are some things in the tax code that do have more of a kind of cliff, like we would think about it.
Yeah, that's what I was wondering, like if other areas of the tax codes are set up like this, or are some very strict?
Yeah, most of them are marginal, kind of like we were talking about with the income tax brackets. There, at least one that comes to mind that's more of a cliff is IRMA. We've talked about our Aunt Irma, right?
Aunt Irma.
Yeah, so income-related monthly adjustment amount is what that stands for, and it's related to your Medicare premiums. With with that, if your modified adjusted gross income goes $1 into the next tier, then you're going to be charged higher for the entire year for your Medicare premiums. So that's one that we're always very careful with when we're kind of doing tax strategizing. Make sure to leave a little buffer room if we're doing Roth conversions or something like that, so you don't accidentally go $1 into that next tier, because then you're paying, it could be $180 a month extra for Medicare.
And so will people kind of see this tiered approach laid out in their actual, their wage reports or statements, or is it just kind of convoluted and they just have an amount? Yeah,
it's pretty convoluted. So it's definitely not going to be on like your W-2 or your pay stub or anything. And even on your taxes, if you look at your taxes there, it's just going to show you the gross amount that you made. It's going to show taxable income, things like that. But even then, it's really just going to show the amount that you're paying on taxes. If you look at, it's like the second page of your taxes, you can see the actual federal income tax that you're paying.
Yeah.
If you take that as a percentage of your income, you'll notice it's less than your marginal tax rate.
But then how would people, I think that's the thing too, because even if you do that number and it gives you, let's say, if I do it, it gives me like 20%. Well, I'm just thinking that it's a 20% tax. Right. Not the tiered thing.
Right.
So how would one look up where exactly they fall? So you mentioned married joint filing. If someone wanted to see where they qualify, where would they go?
Yeah, so I mean, you can just look up the tax brackets online and kind of see exactly all the income tax brackets and the breakdown of each of them. And then you could look at your taxes and say, hey, my taxable income was, let's say it's $80,000. Well, I know that as someone just filing as a single filer, it's like the first $12,000 of income is in the 10% tax bracket, and then it's like $12,000 to $47,000 is in the 12% tax bracket, and then above that would be in the 22. So you can see, if you're in the 22% marginal tax rate, your actual percentage taxes are going to be slightly less than that, because you have some income in the 10, some in the 12. The government, of course, is taking taxes elsewhere too, so they're taking it from Social Security, Medicare. They're taking taxes elsewhere. But at least for federal income taxes, it's that marginal system, and it's important to kind of understand that so people know, hey, if I get a raise or if I'm earning some extra money, I don't have to worry about actually making net less than what I was before. It's just the government's going to charge you a little bit more on that extra money.
Well, hey, Caleb, this is great information, and I don't know why they don't advertise it.
Right.
Because this is actually good news.
Yeah, it is. Yeah.
So, well, thank you.
Yeah, thank you.
For that. And if you would like more information about Foster Financial, we'll have their phone number and their website listed below, and they will help you figure out all these hidden gems and so much more as you plan out your financial plans. And I look forward to seeing you after the break.
This segment sponsored by Foster Financial.